Welcome to the episode 9, part 2 of the Stock Market Fundamentals and Technical series. In part 1, we looked at the fundamental analysis of Container Corporation of India, CONCOR. In part 2, today, we are going to take a look at the technical analysis and what would be a good time for a long-term investor to buy CONCOR, uh, what would be a good time for a swing trader to enter and exit CONCOR, and what would be a good time for an intraday trader for entry and exit on CONCOR. All right, so let us begin. What you see on the screen is the daily chart. Now we are going to take a look at the long-term investor's perspective. So we need to go into a much higher time scale. So what I have opened is the monthly chart, and we'll take a look at how the stock has performed overall. So if you look at this stock's monthly chart, and if you analyze at a very high level, the chart has done really, really well. There have been a few dips. Once in, I think, 2011. Then we had another dip in another 2011, then 2013, and then we have 2017, 2019. But every time it has gone down, it has only given us an opportunity to enter the stock, and then ultimately gone up. So we've seen that this stock has given us bonuses and splits on a regular basis, and it has also given us good capital gains over a period of time. So this is an excellent stock, there is no doubt about it. Now, for a long-term investor, I don't really see a very good level anywhere here. I see one here. Um, just a second. Yeah. I see a level here at 605, but it is very far away from where we are right now. It's 85 rupees below the current price. It is going down this month, so there is a chance that it might take a dip there, but it may, not take a dip and continue to go up. If you really ask me, I don't mind buying CONCOR even at the current price because I've seen that this stock, over a period of time definitely grows. So, um, so in the long run, it is definitely going to give you profit, and that is the advantage of being a long-term investor. Even if you have, let's say that you buy a particular stock at a certain price, and then the price continues to fall. If you're a long-term investor, you could either hold on to the stock or buy some more at a lower rate and average out the price. While I don't recommend that for every stock, um, because there is a chance that you might continue to average out and the price might continue to fall. But if you see a stock like CONCOR or you know the different stocks that we've seen as a part of this series, the platinum list as I call it, it is fairly safe to average out once or twice. So, and you have to understand there are no strict rules of stock market investing. We need to use our judgment on a regular basis, and we need to take a call. So in this case, I don't mind buying the stock right now at the current price as well. And if it does continue to go down, then um, I would buy again at 605, which is the actual level that I see here. Um, or otherwise, I could wait until the price falls and goes down till 605. If you see here, the price is going up a little bit, down a little bit, so it's not decided as to whether it's going to go up from here or down from here. So if we could wait a while and see if we see another red candle next month, and if we do, then we could wait until it goes down to 605. However, if it does not, and if we see a green candle, then I don't mind buying it at CMP. So that is the long-term perspective. I could go into the weekly chart and analyze the chart one more time. Like you can see, it was on an upward trend, but now I see lower highs and higher lows, which essentially means that uh, the trend may be changing. And it is definitely sideways for the last couple of weeks. So there's a possibility that the stock might go down till 605, and I don't mind waiting. So for a long-term investor, 605 would be a good price to enter, 605.35. I could keep a stop loss at 541.95, just below the demand zone. And while there is no supply zone, I could keep a 1:3 profit ratio um, and keep a target here. Now, a long-term investor usually doesn't worry about a target. The idea is to keep on investing until the day you retire and then sell off everything and go on a world tour. But if you were to keep a target, you should definitely keep it at 1:3. And I see that there's a 1:3 at 819.95. Now that's the long-term investor perspective. What would I do if I were a swing trader? So we are already in the daily chart. Uh, on the weekly chart, I would like to go into the daily chart and see if I can find an overlapping um, uh, zone here. Now, I see that there are a few zones, few basin candles here, so I could have one demand zone here, and I could wait for the stock to come down to 656.45, keep an entry here, and keep a stop loss under 638, right? And I see there's a supply zone here. Let's see if I can getting a 1:3 uh, rewards to risk ratio or not. As a matter of fact, I am. I'm getting a 1:4 rewards to risk ratio. So this is the entry, 657.2. Stop loss would be at 630. Actually, I'll reduce it just a wee bit below the demand zone. So 637.4. And the target would be 740.6. And that gives me a very healthy 4:1 rewards to risk ratio. Now, let's say I am an intraday trader. Then I need to go much lower. Um, in my time frame. So I'll go to 15 minutes and I will take a look at today's data and a few yesterday's data perhaps. So I see day before yesterday there was a few demand zones and supply zones that were created today. Now this calculation I should have done early in the morning. It's already about almost 2 o'clock, so I shouldn't really count this. But so this really doesn't apply. Okay, the supply zone that I see here is this. Right? So in this case, I'm assuming that I was here somewhere around here in the morning. What I would have done is I would have kept an entry here as an intraday trader. I would have kept my stop loss somewhere around here and my target here. Now I can see that there is already a supply zone here. The price drastically fell from here. So when the price goes and touches 701.65, which, well, it did not today. So I would have not been very lucky. Um, I would have missed it just by a bit. 701.45 was the highest that this candle went. So if it would have gone up to 761.65, it would have triggered off my intraday short, and then it would continue to fall and fall and fall until it reached 683.15, which would execute my target buyback over here, and I would have made a profit. So, but the point is not to look at the specific numbers, but to try to understand the philosophy, try to understand where the supply zone is, and the price reaches very close to the supply zone somewhere. If once, with practice, you get really good at it, you understand where the price is going to change. So from the supply zone, as you can see, the candle, touched that vicinity, and it immediately started falling, and then it, touched the demand zone, and then it started rising from here. So this would have been an excellent intraday trade for us. So um, that's all I have for you today. The purpose again is not to give you the numbers of when to trade, while you can actually look at the numbers of the long-term investors and the swing traders as well. If you're current with my videos, then the numbers definitely apply. You could use those numbers to buy the stocks and sell the stocks. Intraday, you need to use your logic because intraday is very, very time sensitive. And I'm not very particular at what time I'm shooting this video. So early in the morning, try to identify the demand zones and the supply zones and set your entries, exits, your stop losses, and your targets, and set your trades. Be very, very strict with your stop losses, especially in intraday, because otherwise you may end up making a much, much larger loss. And the idea is to make smaller losses and larger profits. That's how we make money. I hope you enjoyed the video. I'm always looking for feedback, so do let me know if there's a particular stock that you would like me to cover. Other than that, I wish us all the best, and I hope we make a ton of money off the stock markets. Have fun.